My cleanest and best trades of 2024, that's exactly what I will be discussing with you guys in today's YouTube video. I will be giving you guys a step-by-step recap of my Bitcoin and Ethereum longs that I took last week. Besides that, we will also be going over the management of these trades, and at the end of the video I will also be providing you guys with the most important lessons that I took from taking these two very profitable long setups on both Bitcoin and Ethereum. But Jip, this is probably one of those hindsight trade recaps where you just claim some cloud, where you probably didn't share anything beforehand. Before we dive into the setups, before I will be giving you guys my educational explanation on these setups, we will be doing a little throwback to last week. The elections are coming up, and I do think that we are currently seeing a massive trap on the Bitcoin and Ethereum chart that is going to trap many people, but I'm actually trying to use that trap in order to start filling my position that I think will send Bitcoin and Ethereum to brand new all-time highs this week. Is indeed going to sweep that weekend low into my orders, into that demand area. I will be targeting new all-time highs for a beautiful RR on the swing trade of about 2.5. I expect Ethereum to also start reaching brand new all-time highs. That is laying around $4,800. That means that if this order gets filled, we are looking at an RR of 26. This right here was the Bitcoin trade that I shared in our Discord server. And this right here, ladies and gentlemen, was the Ethereum trade that I shared beforehand in our Discord server. So as you guys can see, there's no hindsight included. I gave everything to you guys on a silver platter beforehand. Before you start looking at executions for potential trades, you always gotta understand the higher time frame context. And when we are looking at the Bitcoin chart at the time that I was entering around, we can see that Bitcoin was retesting a very pivotal area over here. I was saying that this was the must-hold area. The previous cycle we topped out here once and we topped out here twice, forming two previous all-time highs. And when we zoom into the local price action right over here, what we were seeing is that this area that I mapped out was getting respected as resistance and support a lot of times, while Bitcoin was forming a massive range over here for the past 7 months. So I knew that this was a must-hold area for Bitcoin. Besides the fact that it was a must-hold area based on previous price action from the past, we can also see that the last time that we tested this resistance area over here, the price of Bitcoin was clearly forming some demand over here. The demand over here gave us this impulse towards the upside. So if the price of Bitcoin was truly bullish, it should be holding on to this strong demand area over here in confluence with the previous all-time high resistance area. Now when we go to the more local time frame on the 4-hourly time frame, over here what we can see is that within that daily demand, we also have some smaller demand where we can refine our demand area to the previous and the last red candle before we saw indeed that impulsive move towards the upside. This drop over here is where the demand entered the market, then we saw some more consolidation, and then we got our push towards the upside over here. So in my opinion, we can refine that area to this strong demand area over here. Okay, if you extend that to the left over here, then in my opinion you can say that this entire area over here is the must-hold area for Bitcoin if price was truly bullish and would be visiting brand new all-time highs. So then I was going to the 1-hourly time frame, and this is where things started to become very interesting to me, because what we can see over here is that the price of Bitcoin was forming a very clean, high probability reversal structure. At least that's what we were thinking, because what we can see over here is that we got a sweep of the low, and the sweep of that low resulted into a valid break of structure over here, right? Because we broke through a high over here, it brought us to a lower low over here, compared to this low, it brought us to that high. Therefore, this was a significant high to break, and therefore this was a valid break of structure based off price action. But zoom in and look at the bottom of the screen over here. Where was this price action being formed? It was being formed on a Sunday. It was being formed over the weekend. Now I have taught you guys that we can never ever trust price action that is being formed either over the weekend or during bank holidays. How so? Smart money isn't active during bank holidays. Smart money isn't active over the weekends. Why would they make the price reverse if they are not positioned? So retail traders, they don't know this. They don't know this little trick. So what do retail traders do? They see a sweep of the low, right? They see a break of the high, Smart money reversal. Oh my god, Bitcoin is going to pump. So what are they doing? They're opening up long positions over here on the price of Bitcoin. Get into the mind of the retail trader. If they're opening up a long position, where are they going to place their stop loss? Yes, indeed. They're going to place their stop loss beneath the low that started that impulse that gave us a break of structure, of course. If they're targeting, for example, this high, that also offers a beautiful, beautiful RR over here with the stop loss beneath the low, targeting that high, it offers a massive RR of 3.15, a beautiful RR trade, in their opinion, a high probability trade. But they don't know that we cannot trust price action and reversal structures that are being formed over the weekend. So instead, this wasn't a high probability reversal pattern, this was a trap to engineer liquidity beneath this low. And that is exactly what we want to see. A beautiful engineered liquidity pool right above that key demand area that I was talking about. So that means that right now, I do not only identify this trap so that I don't get trapped into a long. No, I'm identifying this trap over the weekend to use it in my advantage to play this high probability demand area over here with my entry at the top of the demand, stop loss beneath the demand, and then we should be looking at potential targets for the price of Bitcoin. Now, many people will be looking at this high as a first take profit target, but guys, I'm going to give you guys another tip. We always want to look at a second to highest high. So when I zoom in over here, what I can see is that we had this high over here, and then we also had this lower high and this lower high over here. You do never ever want to be greedy. You always want to use the second to highest high over here, or even this high right over here. Why is that the case? Because that's where the true liquidity is resting. The people that open up shorts on this push to the downside or on this push to the downside, they want to use a tighter stop loss to increase the RR of their short. So instead of using the widest high to cover their stop loss, they're using this high to cover their stop loss to increase the RR of their short. So that's where the true liquidity was resting for my first take profit target on this long position for Bitcoin. Besides the first take profit target, straight after, very soon, we will be entering brand new all-time high, so we will be entering price discovery mode. So I decided that my second take profit target was around $79,000 for Bitcoin, because that's where a lot of Fibonacci extension levels were coming together, and that would offer a major RR of 5.5. So we anticipate the trap, we use it in our advantage into this demand, we trust our system and do not let news events or any noise influence our decision making on the charts. And we can see that we got filled right before the elections, and over the election Bitcoin saw a massive pump to our first take profit target, and later on Bitcoin also was witnessing a major pump towards a second take profit target around $79,000. The Ethereum long was even cleaner in my opinion. Once again, we start off with understanding the higher time frame context before we start looking at the potential execution. What we were seeing was accumulation. I was seeing that we were in a potential manipulation phase before indeed potential distribution. This is the higher time frame context. Whenever you get a breakdown out of a previous range like this, if price starts retesting the previous range low several times, you should not be looking for shorts, guys. Because if price is truly bullish after such a breakdown, it wouldn't offer a perfect retest like we were seeing over here. Instead, it would break down, consolidate, get a sweep, and then continue to the downside. So I decided that it was time to start looking for potential longs on Ethereum based off that higher time frame context. And when we zoom into the local price section over here, there was something very clean developing on the price for Ethereum. What we were seeing was a major trend line over here. Guys, once again, get into the mind of the retail trader. This trend line was getting respected once, twice, 3 times, 4 times, 5 times, 6 times, guys. Every single retail trader was looking at this trend line of support at the time. You guys know, instead of trading trend lines, we should be using it to identify potential traps. Now, that means that I was looking for a potential fake breakdown beneath this trend line to trap people into breakdown shorts, because they're always breaking down the trend lines and then entering breakdown shorts targeting lower levels. I wanted to trap those people before we were witnessing a potential reversal towards higher targets. That was the plan. And in line with that plan, guys, we were also seeing a major weekend trap like I just discussed on Bitcoin. We were seeing a very similar structure on Ethereum, in which Ethereum was sweeping the low over here. After sweeping the low, it was breaking through this high over here, which means that many people were trapped into longs over here because they thought that this was a high probability reversal structure. But instead, the structure was taking place over the weekend. So we cannot trust this structure. So what it was doing, it was just engineering even more liquidity beneath the low. So the plan for Ethereum was very similar as for the plan for Bitcoin. I was looking for a sweep of this low and a potential fake breakdown beneath this trend line. That's where I would anticipate a long position on Ethereum, anticipating that higher time frame PO3. Now we can also see that right beneath those lows, we also had this strong demand area right over here for the price of Ethereum. So I was looking for a fake breakdown beneath the lows into this demand area right over here. That's where I was looking to fill my order for Ethereum. And then as per my invalidation for Ethereum, when we have lows that are lining up like this. So we have 1, 2, 3 lows lining up. You never ever want to place your stop loss beneath the first low. You never ever want to place your stop loss beneath the second low. No, you always want to place your stop loss beneath the third low over here. So that's the low that I was using to cover my stop loss. Not the low in this case beneath this demand. Whenever you have lows lining up like this, for example, you always want to use this low to cover the stop loss of your long. When you have highs lining up like this, for example, you always want to use this high to cover the stop loss of your short. Keep that in mind. So then we can see that we got filled on Ethereum, and my first profit target was this buy side liquidity right above that manipulation phase. Indeed, our first profit target already got hit on Ethereum, and this major swing trade is still running until that higher time frame PO3 that I was talking about is playing out. So I'm still targeting brand new all-time highs, because guys, we have to realize we have accumulation right over here for the price of Ethereum. Then we have manipulation that we just completed. That's where I was anticipating the potential distribution phase to take place as well, in which I'm targeting brand new all-time highs during the distribution phase, giving us a major RR potentially of about 31. Before, during and after the setups, I've been getting loads and loads of questions on how I was managing my trades. I've seen so many questions like, I remember that these setups, they were hit before the elections begun, right? So the elections were during the night over here in Europe, and before I was getting to sleep, the setups were both in a little bit of profit. So many traders and many members were starting to ask me, but Jip, why are you not moving your stop loss to break even? Because the elections are about to begin, you're about to go to sleep. Why are you not awake? Why don't you tighten your stop loss at least to mitigate the risk? And all that I was saying is that at the end of the day, as I've been teaching you guys, news events, they don't change the price action. So regardless of Trump winning or Kamala winning, I didn't care at all. I wasn't even awake during the elections. Yes, I woke up later that night at around 4 and I couldn't sleep anymore. And at that time my trade was up even bigger. But there was no reason for me to move my stop loss yet. How so? Because the only way that I can either close my trades premature or that I can tighten my stop loss or move my stop loss to break even is once price action and liquidity are providing me with new confirmations for either a tighter stop loss or for a potential reversal. So let's say I'm in a long position and my trade is up in profit, but price action at some point is showing signs of weakness and providing me with a high probability reversal structure for potential more downside. Now that could be a point where I'm saying, okay, I'm moving my stop loss to break even or I'm closing my trade for a profit. But only if price action and liquidity, because at the end of the day, that's all that I can hold on to as a trader. No news events, no noise from the outside, no price action, liquidity, ranges and statistics. If they are providing me with new confirmations for a potential tighter stop loss or a break-even stop loss or maybe even a stop loss in profit, or providing me with potential confirmations for a high probability reversal, then I might decide to close my trade in a profit or to tighten my stop loss. But unless that happens, I got my plan, I trade my plan, and I stick to that plan no matter what. Managing my trades is easy as long as you don't involve your emotions and you know your system and you know your risk and you know your reward and you know that over a longer period of time you're going to be a profitable trader. There's no need to let emotions get involved. So let's recap today's video, guys. What are the two most important key takeaways that we can take from today's video? These are two takeaways that in my opinion can honestly change your trading strategy and can higher your win rate significantly. There's two key lessons here. The first one is that we should never ever, and I mean never ever, let news events influence our decision making on price action. We should never ever let news events let us change our trading decisions. What we should do instead is simply look at the charts, try to see and figure out what the charts are trying to tell us, because we know that all that news events are doing is never ever change the price action, but instead all that it's doing is speed up the process of it. If you hit a stop loss during a news event, it's not due to the news event. The reason that you hit a stop loss is because your setup wasn't high probability enough, or simply it was due to the probabilities, because there's no trading system that includes a 100% win rate. Let's say you have an 80% win rate or a 70% win rate. Over time, the win rate remains the same during news events. But what you should be doing instead with news events is treat them as a massive opportunity, as we could see in today's video. The second key takeaway here, guys, and this is something that I've been going over many times over the past few months. I even made a YouTube video on this that I will link to you guys after watching this video. You can find the link to that YouTube video in the description down below, and it's all about not trusting weekend price action, guys. I've been going over this so many times, but we cannot trust it. I've been explaining it to you guys many times. I've been explaining it in the YouTube video as well that I will link to you guys. But whenever you see certain price action that you normally would always trust and that normally could maybe even give you triggers to enter a trade, but if that piece of price action takes place over the weekend, or if that piece of price action takes place during a bank holiday, we cannot trust that piece of price action, and instead we should treat it as a potential trap. But that means that we can use it in our advantage, exactly as I was doing it last week. So I identified the piece of price action, which actually was a clean reversal structure, but I noticed that the reversal structure was taking place over the weekend. So instead of using it as a long trigger, I identified it as a potential trap, a trap to engineer liquidity beneath the weekend lows. That liquidity was aligning with that demand area. So basically the weekend lows were acting as an inducement for that demand area. So instead of just identifying the trap and not entering a trade because I realized it was a trap, I used the trap in my advantage to identify a higher probability trade, set my limits, forgot about it, let news events enter my limits because it speed up the price action, the process of the price action. My limits got filled and we hit a major take profit target. Two key takeaways: always trade news events and never ever trust weekend price action.